So now I believe everybody can see my screen. I believe everybody can see my screen. So like I said, we'll be having four major classes, which is the structure. The second one is the point of interest. The third one is top-down analysis. And the fourth one, which is the last one, is psychology talk. So this is our first section together for July class, which is the structure class, and that is what we're diving into as we speak. So in terms of structure, when we're dealing on structure, what are we talking about? We're talking about the market movement and how the market basically sets up itself. So in terms of structure, what we normally have is the uptrend, downtrend, and the ranging market. Those are the two types of market trends, the three types of market trend, I'm sorry. So if we're having an uptrend, for example, as an APA strategy trader, you are supposed to understand that each of the retracement levels are not supposed to be violated. So, for example, this is an uptrend, then this is an example of a sell trend. Then I'll talk about the ranging market later, but let me just deal on this first. So now this is it. If you have the market buying, example, you have an uptrend market. Whenever you have an uptrend market, you are supposed to understand that the market is not expected to disrespect each and every of the retracement point it creates. So if this was the previous retracement point the market creates after creating a break all the way to the top side, it is supposed to be respected. That retracement zone at this downside is supposed to be respected. So this is now our newly retracement point, for example. Don't forget anything I am explaining on the live chat, we'll also dive into the live chat. Which is anything I'm explaining on the line chat, we'll dive into the live chat to also talk about it. So I'll use the line pattern firstly to explain it clearly to you guys so that you guys understand everything in general properly. So and this is an uptrend, for example, and this was our previous retracement zone that was created on an uptrend. That retracement zone that was being created should be a respected retracement zone. If the market fails now to respect this retracement zone and break all the way to the downside, this is to tell you that a sell is about to continue. The market is about to sell. Why? Because of one of the retracement point has been broken and the market has violated a proper retracement zone. Now, how do I know when a retracement point is broken or when the previous low is being broken on an option? It has to be broken with a body of a candle. That is one thing. So if we are dealing on structural break, which is if it's an uptrend, for example, and the market fails to respect one of the retracement points it created, I'm talking about high time frame, then the market break all the way to the downside. If it's only a week that breaks to the downside, it hasn't broken any structure. It can still continue its previous movement it was being created before. Like it can still continue that uptrend because of why the market only used a week to break the downside of the market. So now this is it. Once we have a structural break all the way to the down, it should be like a clear candlestick body and not a wig. A clear candlestick body. Same thing for the cell structure also. If we're having a cell structure, this is a cell structure, and this was our previous retracement point that the market creates to break the low all the way to the downside. So this is the break of the low to the downside, for example. That is the break of the low to the downside. Once the market fails to respect this previous retracement level it created at this point, and now go all the way up, breaking to the top side. That is to tell you that what a buy structure is now about to be created. Like I said, every single thing we'll be talking about on live chat, we'll be dealing on that same stuff on the live chat. You understand? On the live chat, we'll be dealing on that also. So now this is a structural break for a buy also for a buy trend now to be created. And once a structural break is being created, at most, like at least, the market should use a body of a candle. We don't use wigs. It must be a body of a candle that will tell you that, okay, yeah, this is what the market has used in breaking a structure. We don't count wigs as any break of structure. It must be a body of a candle. So same thing for a ranging market. If we're having a ranging market, for example, this is the market and the market is ranging. If you mark the high side of the market, this is the high side of the market, and this is the low side of the market. So if the market fails to respect that retracement, that ranging market is that is being created, and either break up or either break down, That's to tell you that what the market is going to continue that same pace it has done. So if this is the market now, the ranging market, and the market fails to respect either the down or the up and does something like this, for example, break all the way to the top side, you will see that the market will not continue buying. Why? Because of a ranging market has been violated. So for another the major thing about structure is that for another trend to continue, the previous retracement or the previous highs or low that was being respected must be violated. The reason why I added highs on low is because of, we also have ranging market. So for a buy trend now, for a buy trend to be violated and start making a sell trend, that is to tell you that what the previous low must be violated, which was the previous retracement point that created any that created any break or structure to the top side before previously. So for a sell trend now to be violated, the previous high must be what like must be obstructed, must be cancelled. The market can respect the previous high and break all the way to the top side. But it must be with a candlestick body. Don't ever forget that we don't mark weeks as a break or structure. So we'll be diving into the live chart so that I can explain more from this because this is just a line example of what I've been telling you guys. So let's dive into the line chart. Although the market has been crazy this period, price action has been really crazy. So this is 15-minute time frame. And mind you, I forgot something, thank God. That is for a structural break. I didn't talk about this thing. I didn't talk about continuation of a trend. So if we're having an uptrend now, for example, we're having an uptrend, this is an uptrend, and the market now uses zone in breaking the next high. How will you be able to get your continuation of a trend? There's a way I do mark out my continuation of a trend very easily if I want to catch up a continuation of a trend. And when you're marking a continuation of a trend, always make sure that just make sure that you are sure of what you're doing. Don't go and take a buy when you're supposed to be selling. Don't go and take a sell when you're supposed to be buying. So if you know that the continuation of that previous trend that was being occurred before will continue, this is how I do catch my trade. So sometimes you can see gold or any pair just buying massively or selling massively. Like I think right now gold is selling seriously. So now, for example, if gold is buying so seriously, how would I be able to cash another next buy since I know that the volume on the buy side is higher? This is what I do. I do mark from the highs of the market. So this was the previous high that has been broken, and I do mark the low of the market. So once I do that, I will take out the 50%. You see that my listen my square drawing does not already have a half cut, meaning the 50% of the square. Yeah, so that already, no need for me to use the Fibonacci that will be telling me, okay, this is 50% or whatever. It is just the square I do use. So once I mark the 50% now, it is now expected of me to mark all those as an outlook. An outlook is different from a buy. If a trader tells you this is my outlook for a buy, it doesn't mean he's just going to buy all at that point and start buying. You understand? Outlook means that is where he's trying to cash out his major buy from, maybe using smaller time frames to modify it, but that is where he's expecting the market to start buying from. So once you have marked this point like this and you say, okay, this is your outlook, so it's now expected of you to now start looking for trades around this particular zone once the market happens to continue the next highs again. So this is how I execute most of my trades on XAUSD when I talk about continuation. Same thing goes for the cell structure. If we're having a cell structure, for example, this is a cell structure, and I want to continue the trend. What will I do? I do mark the 50%, which is if it's a sell, you're marking from the low to the high. So I'll mark the previous low, which is here, and I'll mark it all the way to the high. So once I do that, I take 50%. Where is the 50%? This is the 50% of the trend. 50%, then I delete the square. So it's now said to be that this is my outlook from around this point to this point will now be my outlook. I'll be looking for buy. So once market start retracing back, giving us a little low, because once the market has broken structure, the retracement must occur for market to take out on liquidity. So once market tapping to that point now, for example, I will now start selling again to continue the trend. That is if you know that the sell will continue. Same thing for ranging points. This is the ranging market now, for example. But on ranging market, there is a way I do my ranging market. Ranging market is very, very sweet if you have it on daily time frame. If you have a very structural range market. This one I usually like go up, go down, and you see in the market well. Not that one I just shop it, I just see one place. That one is not, you won't enjoy it on even any small time frame or whatever. And I think that is what gold was doing recently. So now this is if this is daily time frame, for example, you will enjoy it so much because if you see any pair moving like this on daily time frame, this is what I usually do. I just mark the lows and the high. So it's expected of me to start buying at the low side and start selling at the high side. So what do I do? If I take a buy now, for example, to on the downside and the market start going up, I usually close at the 70% of the market. So which is around there. I won't wait for the market to hit up there because any hit here can create a serious drop to the downside. And you don't know when the market will say, okay, it wants to clear it down. So 70% is okay. That's what I usually do for continuation of a range in market. So we're going to dive into the live chart because the live chart is what's going to make you to understand a lot of what I'm explaining right now. So let's just deal on continuation first. So for continuation of a trend, I knew that this trend is going to continue because you could see a massive buy on gold at this point. This was the trade I posted on Friday. Yes, and that's the massive buy now, for example. And if you notice, it's still same thing I've been talking about. What did you notice at this pair? This is the low, the previous low. This was the previous low. The market created a high, a trace, it broke all the way to the top side. It created another low. Now, this low that the market created didn't break this low. It still respected it. At least your low can give you equal levels, which is double bottom. It can do that. But once it breaks it, it's not respected. Just know that something is about to happen. So the market went up again. Then it gave us another retracement. Now, this retracement that market wasn't able to also, like, it wasn't able to come to that point, you see. The market went up again, gave us another retracement, wasn't able to reach up to this point. So this is something like telling you that okay, the buyers are stronger. The market went up again, gave us another retracement, wasn't able to break this low. Like I said, the week is not valid. The week can go down, but that is not trying to tell you that okay, it's a sell. It must be a body of a candle. So you see that the market retraced, but rather the market wasn't able to break this low. So the market went up again. So this is how you know that okay, this is like the market is still on an uptrend movement rather than a sell. So now, like I said, if you're talking about continuation of a trend, this is what I usually do. Said I'll mark the high, which is around here, and I'll mark the low, covering both this thing, weeks and this thing. If you're talking of continuation, then you take it from the 50%. Where is 50%? This is exactly the 50%. So once I mark the 50%, it's now left for me to start looking for point of interest around this low from here to here. And we're not dealing on point of interest class today, we're just talking about structure. When our next class is about point of interest, how I modify my SL, how I make my SL so tiny. That's what we'll be dealing on our next class. But this class is just for structure, structure, structure. So on gold at the moment right now, this is um this is 15-minute time frame. And on 15-minute time frame, what I noticed is that on 15-minute time frame, gold is about to continue a little bit of a buy. I did not say you should not buy every I'm just telling you guys in response what I'm saying. And why am I saying that? Because of the market has started creating a high, a low, a broke structure to this side, another low. But why I said it cannot be that strong, like it's not that strong is because of it hasn't broken the major resistance point, you understand? So that is the major resistance point. So if this buy is gonna continue going all this way like this and it breaks, yeah, that is when you can know that okay, continuation of the buy is about to continue. So what you now do, you will now mark from this high to this low. If you are talking about continuation, then you take from here and start looking for your trade at a 50%. So once that is when the structure, the high side of this market has been broken. Because for this point that we are having series of highs and lower highs, it hasn't broken this major point. So it's not expected of the market to retrace, tap into this point to continue all the way to the top side again. So let's talk about this thing. This is this one I've explained on live chat is about continuation, continuation, and continuation. So we're gonna go to break this thing. We're gonna go to break, which is break kind. The one on my phone, my network is too bad. This didn't start me in, but it's still on continuation of a trend. It's just exactly what I explained here. Series of buy around this point. This is the high that the market is supposed to break. But we had a little series of buy around this point. If you notice, I didn't take any proper buy. This buy that I took, this small buy you're seeing over here was on 1 minute time frame, which is like a scalp, another retracement. So I was waiting for the market now to break this high first. You saw I got the line since, just like I explained at that point. To break this line first, so I know that yes, this buy is strong. So once it broke it with a candlestick body and not a wick, if it's only wick, I wouldn't have still taken it, I would have waited. So once it broke it with a candlestick body clearly, I zoom it, you see, it was with a candlestick body. So what did I do? I started marking out my point. This is the high of the market. This is the low of the market. So where am I to look for my point of interest from? The 50%. Sorry, I'm supposed to look for my trade on 50%. Where is this trade? Okay. And where is the 50%? This is the 50% market, so, which is an outlook. So I'll start looking for my trade and point of interest around that point. So remember, we are not dealing on point of interest. I'm just explaining structure. But only understanding structure deeply, you are even good to go. But you see any point of interest class. But only on if you understand structure properly, like it will be very hard for you to. This is also continuation, but let's leave continuation. Let me deal on break because I've just been explaining continuation, continuation, continuation. But most of my three trades are mostly on break. So this is 15-minute time frame, and this trade was being seen on 15-minute time frame also. So what do we have here? We are having by uptrend a retracement that wasn't able to break the low, an uptrend, a retracement that wasn't able to break the next low, an uptrend, a retracement, an uptrend, and a break of structure. So you can see that instead of the market to continue that is uptrend that it was giving us, at least if you are going up, continue that your uptrend. But rather the market start violating the retracement point, which is the low. You know you are on an uptrend. So once there is a violation of the law on an uptrend, you should know that a sell is about to occur. So rather the market sold all the way to the downside at this point, you can see we cannot see bodies are not weak. That is to tell you that what a sell is about to occur. So what did I do? There is a way I mark out my point of interest and I repeat my trade, and I found this 1 to 11 risk to reward ratio. So let's go to other pairs to other let this load. This is a trade that I risked I posted it. I reached $5,000 on this trade. I don't know whether some of you remember because the market was ranging too much. You see, the market still came close to my entry out of fear. I have to close. You understand? So this is also break and test. So what do we have here? A low, a low, that low. So you see that the market is selling. So after the market created this retracement, it was expected of the market to break the year you have been selling. So after you create this retracement, now it's expected of you to break the down, but rather the market only came down a little and broke the high, meaning it's not about to occur. So instead of you to continue of what a structure, a clear structure has been now I executed this market. This was 1 to how many revolution? 1 to 1 to 20. Hold on, call me with it.